Hi, everyone. It's Ted with the Holmes team at William Raveis Real Estate. And I'm here with Paul Hart from William Raveis Mortgage. I decided to bring Paul back to give us an update on what's happening with the mortgage business. And I don't know about you, Paul, but this last year, since COVID, has been one of the most emotional markets I've ever experienced. Obviously what we hear and what's been happening in real estate is the city buyers leaving the city,
Yeah.
and just a lot of emotion in the market, which has created demand, and we've had low inventory. So I just wanted to get your feedback on where we are with mortgages now. The last time we got together, there was a lot of volatility and uncertainty in the market. And I know we were talking about interest rates and the bond market. And I remember going back to our last conversation, I think rates were about 3.25%, give or
Yeah.
take.
Sounds about right. Yeah.
And so what's happening? So how has your business been affected at this point, and where are interest rates now?
Yeah. So to your point, when the pandemic happened or started, none of us knew what was coming or what was going on. And yeah, the emotion with the pandemic and the urgency of people wanting to get out of the cities and come north where we are, it's something like I've never seen before. I mean, I've been doing this business for 20 years, 21 years, and the mass exodus of the cities coming north to the suburbs was something I've never even, you know, couldn't even imagine happening as busy as it was. The ironically though, with the rates and everything happening, the rates actually kind of leveled off when that happened, and they've been a lot lower on the purchase side since the pandemic. So, what happened was when the pandemic started, people were forced to stay home. Everybody wanted to get out of the cities, and then the mortgage market, as far as rates go, kind of declined and then leveled off. What was happening is the bond market and not to get too technical, but they wasn't sure what was going to happen. So there was a point in time, I would say from March and April through May or so, June, where the rates could have been lower than 3%, but they were stopping the pricing at 3% and just offering more mortgage credits. What that means is that if you were to get 3%, the banks were paying you or giving you a credit of $2,000, $3,000, depending on the loan amount. Then after that, the rates have come down. I mean, right now today, the 30-year fixed on a purchase now, because refi rates are different. I'll explain that in a second. But on a purchase, 30-year fixed, 20% down, very generic loan, I'm seeing 2.5 to 2.3.
Wow.
On a 30-year fixed.
Mm-hmm.
So
go ahead.
No, that's why the buying power is much more, because the rates since we've last spoke are almost 1 point, believe it or not, lower than 3.25 when we last had this conversation.
Mm-hmm. So what should consumers consider now when they're getting a mortgage to purchase? And obviously it sounds like refinancing is definitely something to consider as well.
Yeah. So on the purchase side, let me touch on that first. The main thing for buyers to consider first and foremost is you have to get a proper pre-approval.
Uh-huh.
It's been rearing its ugly head where, I've seen certain companies issue the pre-qualification letters and they're just not accurate, or they're not pulling credit. And then realtors and buyers are having issues because it hasn't been vetted. So a proper pre-approval is first and foremost a necessity.
Yep. I
I think
agree with that.
right on your side, you can touch on people can't get into a property unless you have a proper pre-approval.
That's correct. Yep. That you have to have a pre-approval these days for sellers to confirm a showing.
Yeah. So I mean, that's the main thing. And then other than that, it's working with, I mean, to toot our own horn over here is basically we have access to many lenders. So it's not that you're stuck with one lender or one bank that you're dealing with. There's been times where we had to move things around simply because, something happened with their appraisal, something's happening with, the selling side. So we can maneuver and switch up the product or the bank and figure out how we can get the buyer in the house so that they're not losing their down payment money. On the refi side, now it was about September, Fannie Mae and Freddie Mac have added a 50 basis point well, they're going to call it a loan level pricing adjustment, but basically it's a 50 basis point refi adder so that your purchase mortgage rate is not the same rate as if somebody was going to do a rate and term refi. Could be the same level of loan amounts, but your purchase rate would be about half a point lower than your refi rate.
Okay, interesting.
And on top of that, one more thing, if you're taking cash out on a refi, that's also a bit more expensive now because the cash out, they're making that rate, that's probably another 3/8 higher.
Okay. Well, look, all good information. And, I think it's important to know for the consumer that, when you're making decisions about real estate, we have the insight and information, to help our clients, achieve their goals, depending on what they're trying to do. So look, I appreciate a minute of your time, and we'll definitely circle back in the future and give everybody an update. And below, you can contact either of us for any questions you have. We're always here to help. And please, stay safe, and everybody have a great Thanksgiving. And Paul, thanks again.
Thank you.
All right.
Look forward to talking to you soon, Ted. Thanks.
Okay. Talk to you soon.
Bye.